Why liquidity is leaving Bitcoin and not coming back for now. What if I told you that Bitcoin isn't losing liquidity because of fear, but because investors already found a better place to make money? And the most shocking part? That money might never come back. For months, the bullish crowd has been chanting the same belief. Liquidity is returning. The money printer is back on. Bitcoin will explode. But here's the truth nobody wants to admit. Even with a more liquid global market, Bitcoin is barely moving. Sideways, stuck, losing dominance. So the real question isn't, is money leaving Bitcoin? Is this, where is the money going and why? Let's start short term. To confirm a continuation of this bull cycle, Bitcoin needs to break above two crucial price levels: $105,000 to $108,000, resistance for the last 11 months. Then $116,000, the level that confirms real strength. If Bitcoin can't reclaim those ranges, this pump might be nothing more than a dead cat bounce, and a retest of $98,000 becomes very possible. Meanwhile, leverage metrics show something even scarier. Liquidity isn't just waiting, it's moving away. USDT dominance remains elevated, meaning investors are holding stablecoins instead of deploying capital back into Bitcoin or altcoins. This setup looks eerily similar to the market just before the 2021 to 2022 downturn. Now, let's talk relative performance, because this is where the plot gets real. Bitcoin isn't just failing to outperform expectations, it's failing to outperform everything else. White heavy checkmark, the S&P 500 is hitting fresh highs. White heavy checkmark, the Nasdaq keeps climbing. White heavy checkmark, AI stocks, especially Nvidia, are printing new millionaires. White heavy checkmark, even Tesla is showing stronger momentum. White heavy checkmark, gold and silver, dominating and breaking past major resistance. When you map Bitcoin against these assets, the chart tells a clear story. Lower highs, lower relative strength, lower investor confidence. Money isn't returning, it's rotating. Why? Because the biggest players in finance, the ones who move markets, are reducing risk. Warren Buffett is sitting on record levels of cash. Institutional allocators are shifting into assets they believe are safer this late in the economic cycle. Gold, US equities, even bonds. This isn't fear, it's strategy. The global cycle is entering its mature phase, possibly the end of an 18-year macro expansion. And when smart money senses the top, they reposition early. So here's the core lesson, the one most retail investors refuse to learn. It doesn't matter if Bitcoin is going up. It matters if Bitcoin is going up more than your alternatives. Capital flows to where returns are superior. Right now, those returns aren't in Bitcoin. So is Bitcoin dead? No, not even close. But for liquidity to come back, for Bitcoin to become the outperformer again, it must keycap 1 break above $108,000 and $116,000. Keycap 2 regain market confidence. Keycap 3 prove it can deliver better gains than AI stocks, US indices, and gold. Until then, Bitcoin might still rise, just not enough to win the rotation battle. And that leads us to the final takeaway. In this stage of the market, defense wins. Rotation matters. Timing is everything. If you blindly hold Bitcoin expecting old cycle behavior, you might miss where the real money is being made. So ask yourself, are you following the hype, or are you following the liquidity? If you want more videos exposing what the big players are doing before the headlines catch up, hit subscribe and let's stay ahead together.